All right, hello. I am Matt. As always, this is Stock Speedrun number 3 for the weekend of March 26, 2022. If you're unfamiliar with what a stock speedrun is, you can check this video's description for an explanation and also a disclaimer as to its content. Let's see what the quirky little button excuse me, has for us today. Something called AAR Corp. Oh, how much do I love companies where I can't tell what they do just based on the name of said company. I don't like it at all. Okay, they provide products and services to commercial aviation, government, and defense markets worldwide. I wonder... You know what? I wonder if they have seen a positive impact to their business recently with all of the Ukraine business. A little bit? You can argue a little bit. Let's see, where's February? Here's... Well, it was kind of on an uptrend even before then. When did the invasion start? That was late February, right? Like, I want to say 22nd or 23rd. Had a little bump, and then it kind of took off in the last couple days. What happened to it in the last couple days? Why shares are flying higher this week? Yes, tell me all about that. The fool. It's gonna take me to their website. Yeah. The first 3 weeks of March, shares of AAR didn't move much for the period. This week, however, aviation services stock is gaining considerable more altitude. Look at me, I'm the fool. I can make funny words on a page. Fuck you. End of trading on Thursday. Company's fiscal third quarter 2022 earnings report delivered after the closing bell. Oh, so they had earnings this week. Okay, that explains it. Are the impetus for that lift at AAR also received from favorable coverage from Wall Street? Okay, like what? Fiscal period, top bottom line, expected reported revenue was 432, and earnings per share of 58. It was actually 452, earnings per share of 63. That is pretty good. Investors were likely happy to see the company has fared in the face of challenging headwinds. Early in the pandemic, we took a series of actions to better position the company for margin improvements as the industry recovered. We have now delivered our 6th straight quarter of adjusted operating margin expansion, and our margins are that's pretty darn impressive. 2 favorable takes. Also moved some investors to pick up shares this week, according to The Fly, whatever the hell that is. Michael. Wait, is this referring to all of the same entity? The Fly, Markle Ciarmoli, and an analyst at Truist. Oh no, according to The Fly, this guy, and sorry, I had a hard time parsing this sentence, there's a lot of commas, raises price target to 58 from 53. It's gone past that. Oh, no, it hasn't. It has yet to get to, well, we had a target of 53, raised it to 58. It has yet to get to any of those points, actually. Can it get there? I don't know. We're gonna have to see. While maintaining a buy rating, can Herbert raised from 50 to 56? So at least it's gotten to 50. Had a little bit of an after-hours dip on Friday. Not too sure what to make of that. Analysts bump up price targets. Yes, that's what that just explained. Quarter 3 earnings surpass estimates. Sales rise year over year. I read about that already. Well, obviously earnings look very good. Question is, can they continue to look good? You know, let me take a look at this earnings summary, and maybe I can explain why the earnings were good. 53 cents per share, the company also reported. You know, this is another term I should look up during the learning sessions. I'm going to write that down. Quarter in review, net sales worth this. Fiscal year, with the aviation services segment totaled 438. Expeditionary services, whatever that is, Recorded sales of 14, down 31.1%. Maybe I should just drop that sector, or drop that section and focus on your aviation, because apparently that's where it's doing good. Just a quarter, expenses rose in the mainly due to digital and other investments. So expenses rose, they still managed to come ahead. Adjusted operating margin expanded to 6.7 from 5. Really only has a Zax rank 3 of hold. Interesting. Financial details, cash equivalents, 40 million. I would like to know, maybe I can find that out in the conversation section. Let's see what these geniuses are talking about. Maybe newest stuff. Looks like it's about to drop. Be careful, guys. I have been reading this thing, which is probably a scam, and their stocks have been doing way better. Okay, that's nice. I don't care. I mean, you're obviously a shill, so I'm not going to pay attention to anything you have to say. Expect new highs in the 50s tomorrow. That didn't work out. See you all at 50. That did work out. Got a little bit ahead of yourself there, Scott. Buy Largo. Actually, there's not a whole lot in here. Let me go back to the summary. Let's see what else I can find in here. For its third quarter, signs distribution deal with Collins Aerospace. That sounds pretty good. Ooh, it's part of Raytheon. Nice, playing with the big boys. Speeds up plan to reopen to international tourists. I can see why it's telling me that, because that's to do with planes, even though it technically doesn't have to do with this company. Finding it tricky to allocate its capital. What are you talking about? Mature business has passed the growth phase. Growth phase? No, growth phase. It's been a long day. Some of the underlying things that pop up. Return on capital employed is apparently this thing. Return on capital of 4.7%. Ultimately, that's a low return, according to this thing, which they very possibly could have just made up. Return on capital employed. Earnings before interest and tax divided by total assets and current liabilities. I guess that makes sense. Return on capital employed. So this is the capital they employ, and this is their return on it, and this is basically the ratio. That makes sense. And they have a lower ratio than other folks in this same sector. Okay, that's an interesting thing to point out. Finding a tricky allocate capital. Read that already. And actually, I kind of get the title of the article now. Finding it tricky to allocate capital because it's not allocating its investment in a way that it's potentially maximizing its earnings because it has a lower rate of ratio or lower rate of return for that. That makes sense. Third quarter results. That's the announcement of the announcement, which is always nice. You know, we gotta have the meeting to plan the meeting. So that's always fun. That's something else. We're ready for a bull run. Named among America's best mid-sized employers. What did Ernest Partners do? What did Meyer Handelman do? What did... Oh, I guess that's the end of it. Now trades of Golden Cross, time to buy. Apparently it was back then. Let's see. So what's interesting is that I'm seeing a lot of articles back here basically where people are screaming out that this thing's going to go up. What did it do? It went up. Is it a solid growth stock? 3 reasons to think yes. Now trades of Golden Cross, time to buy. Has it outpaced other aerospace stocks this year? 5 low price to sales stocks to buy for rewarding portfolio. Actually, let me look at price to sales real quick. Statistics. That's price to earnings. Well, I mean, that's probably fine too. In fact, I prefer this metric over price to sales. These numbers are pretty sensible. These aren't bad. That's probably about average, I would say. Let's see. Ooh, you know, something I'm noticing down here, that's a fairly large percent of the float being short. I wonder why. I wonder why it's short like that. I mean, it definitely didn't work out for them in this last earnings report. Seeing as it was amazing and it went up, you know? Could there be the potential for a short squeeze? I don't know. I feel like the word short squeeze has kind of lost all meaning in the last year with all the GameStop crap. Let's see. What do I wanna look up? I can't really think of anything that I want to look up, to be honest. Let me look at these. Also, I just noticed a ticker, AAR. That's pretty cool. Wait, did I not do this properly? There. AAR, where is it? Okay, new purchases. They liked it. They bought it. Nice, nice. Fine. They apparently had it already, and they added more, so they like it too. What else do I want to look at? I want to look at... let me look at holders. What? 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 This is not possible. Percent of shares held over 100. Shares held by institutions over 100. What does that mean? Essentially, companies held as a way of gauge where larger investors are investing their money. These institutions include hedge funds. Sometimes you may come across a case where an investor appears to hold shares in a company that far exceeds what actually exists. Obviously, it's technically impossible. Institutional or individual will hold more than one. So when you see an investment information website reporting institutional holdings to exceed 100%, you can probably assume there is something wrong with the data. I mean, that wouldn't be outside of the norm. That wouldn't be outside of the norm for Yahoo for their data to be fudged. But there are likely two sources responsible for these reporting errors. One is slow updates, and two is short selling, which may in fact be it. Because that was I know it's only 6%, but still, that's a percent you don't see very often, I feel like. Especially in a mature company like this, which appears to be doing well. Apparently a lot of people think that, no, it's not really doing all that well, and I kind of want to know why. But this seems to explain... Okay, wait, let me read this. Remember, short selling is when one investor... Here's an example of one of the most likely causes of distorted institutional holding percentages. Let's assume company XYZ has 20 million shares. Outstanding, and institution A owns all 20 million. In a shorting transaction, institution B borrows 5 million of these shares from institution A, then sells them to institution C. If both A and C claim ownership of the shares shorted by B, okay, that makes sense. That makes sense. That also kind of brings up a little bit of a weird question. Like, why are the institutions basically able to determine what ownership even means? Shouldn't there be a definition that says you hold these? You have physical control over them. If you've given them to someone else so they can sell it short, you don't have control over them. So can you really say that they're held by you? I don't think you should be able to say that. But apparently, you know, it's just the wild goddamn West out here. Okay. So, let's see. But yeah, I guess that explains why. So there's a lot of shorting going on. Well, actually, so let me do some math here. Let me do some quick maths. So the only time that shares can get double reported is when they're short sold, right? And ooh, let me stick that on top. There we go. So if I go back to the statistics and I say, I kind of want to know what I'm going to give this. I just want to do this math real quick to kind of demonstrate short percent of float, or rather, let's do short percent of shares outstanding. So 5.4, right? So the most that you can double report is 5.4%. So if I go back here and I say that maximum 5.4% of this number is false, then I can say, and I know this isn't exact because I know the way that math works and it's not going to be exact, but I'll take that minus, where is it? Minus 5.4. 97.06 is the most amount of shares, or actually no, not the most, the least actually, because this is in the case where everybody double reports. This is the least amount of shares that it is possible for the institutions to own. That's impressive. It's a lot of institutional ownership. I saw some insider ownership also, but I don't know if I want to give this a buy, to be honest. Giving things a buy when they have just so recently spiked up like that makes me very nervous. And even though it seems to have a lot of institutional backing, you have this massive percent of institutions, you have those reports where institutions are buying more or are starting positions or adding more. You have obviously the good report. You have a whole lot of good news about the company leading up to the report. There's kind of a lot of things that make me nervous also. One, of course, is the fact that, you know, it has just spiked up recently. It could very well have a little bit of a pullback. But also that short percentage. Yes, a lot of institutions are holding this, but an unusual percentage of not just institutions, but also just people. You know, it could be just people. Apparently think that this is going to be shorted also. Now, you can make the argument that those short positions were most likely taken prior to this earnings report, and thus it is possible for them to get squeezed out, potentially sending the price higher. And yes, that is a possibility, but at that point you are kind of betting on hope, and that is something that I do not like to do here. Kind of like if I was to give this a buy right now, I would basically be hoping that it can still ride the tailwinds of that earning report, which just based on the fact that it had that pullback in post market on Friday makes me think that it kind of has the wind out of its sails. So the most it's going to do is to stay at this level that it has spiked up to, and at worst, it is going to start sliding back a little bit. Maybe not to where it was post spike, but at least somewhere in between where it is now and where it was. That's kind of why I don't want to give this a buy. I do feel comfortable giving it a hold, though. So I'm going to go ahead and hit that hold button. I do feel comfortable giving it a hold because even if it does pull back, I don't think it's going to be a lot. It does look like a solid company that can do well in the future. I am just not entirely sure when it will continue to go up, and that's why I didn't want to hit that buy button. But I think if you have it, that's what hold is. Reminder, hold is if you don't have it, don't buy it. But if you already have it, if you don't have it, don't buy it. But if you have it, then go ahead and hold on to it. That's what that means. And I think if you have it, you most likely had it prior to that earnings report. I highly doubt. I mean, obviously, there are people that bought it after that earnings report, right? That's just fact. I mean, I don't know what they were thinking. I wouldn't have, personally. But maybe think of this hold call as more being attributed to the people who already had the shares pre-spike, pre-earnings report. For anybody that bought the shares post-earnings report, I would honestly say sell for those folks, but I think that's probably the minority of shareholders of this for now. So this hold mostly pertains to people who were holding it before, because, and the reason why I say hold for those folks is because obviously they made a gain. There is potential for future gains, well, in the future. I don't think it's going to come back. Well, actually, no, I shouldn't say that. I don't think it's going to pull back so much that it will go back below that level to where it was pre-spike. So I don't think the potential for loss for anybody who had bought it pre-spike is possible. I hope that rambling made sense. So that's what I think of this. That's what I think of AAR Corp. And thank you for watching. Thank you for joining me, and I will catch you in the next one.